they tend to be too focused on the tweets, as we were just talking about, right? And if you just looked at the tweets and you looked at the headlines over the last 3 or 4 months, you'd think that things would be worse. But if you look at the markets, it's actually been we've had 4 consecutive months of positive returns. The market looks like, maybe next week we might even make new all-time highs. But the people who look at the tweets are going to be missing all that. And so, you would have been concerned about trade wars, you would have been concerned around Turkey, and you would have missed out on these returns. And that's typically what happens at the end of at this point in the cycle, is that people just don't. They don't focus on the fundamentals.
They're nervous. They're kind of exhausted by a long bull market.
Yeah.
And I think it's an interesting point. You think this is not just what's happened in the last 4 months. You think this is going to continue for the rest of this year. There's still some pretty strong potential upside.
I think that's the opportunity, right? If you focus on the fundamentals are really good. I mean, what we focus on at RBA are profits, liquidity, and sentiment. And all those things are actually really positive today. We're seeing accelerating profits growth. You're seeing liquidity that's super healthy in the U.S. In fact, lending standards are actually easing, which actually gives me confidence that there's no end in the very near term. And sentiment, people are extremely bearish. I think almost every Wall Street house on the street is bearish in some form or another. That's really positive for markets.
I guess one of the questions, and this is not just headlines, but if you extract from those headlines the idea that we could be in a trade war, that tariffs are coming in, that extraction to that is that for companies' bottom lines, it's going to be a problem because their costs are going to go up all the way around. Their margins are going to get eaten into. You don't think that's the case?
The margin story has been something that people have been harping on since pretty much the start of this cycle, right? Margins are record highs, and something's going to cause them to collapse. They're either going to mean revert, labor costs are going to shoot up. Now tariffs is the latest story. But I think what they're missing, and what this has come out in a lot of their earnings reports, is that pricing power is back. I mean, whether you're talking about machinery, you're talking about beverages, you're talking about diapers, toilet paper, prices are going up across the board, and they're not just in areas where their demand is strong. They're actually happening in areas where demand's weak, but they have to raise prices, and they're able to raise prices. I think that's the story that people are kind of missing out on here.
Jodie, if that thesis is correct, I'd say it'd be a little bit dangerous not to be in stocks, because if we're facing inflation again, your money that's sitting in cash is going to be less and less valuable.
Yeah, so I think what's interesting about this environment, we look a little more at the macro factors. So
Sure.
I'm looking at things like the dollar and inflation, interest rates, GDP growth, and these have all been very favorable for the small caps in particular. And in the small caps, now we're seeing year to date the biggest outperformance, the biggest small cap premium, third biggest in history, the biggest since 2008 and 2001. So those two numbers, those 2 years ring a bell, right? And is that a warning sign? I think in itself, it's not. One key difference right now is that the large caps are still positive. And in those years when the small cap premium was there, the S&P 500 had gone negative. So we still have strong fundamentals. Bulls don't die of old age. You need things like a fear of recession, rapidly rising interest rates, or a lack of consumer confidence, and we don't see that. And with the stronger dollar, that's really helping the small caps.
Jodie, I know you can't talk about individual stocks, but are there sectors that you think outperform, not just the small caps, but sectors that you think are really poised?
The healthcare sector has been driving the performance, and I think that they are well positioned because they have so few of their revenues coming internationally. So, for example, like technology has about 60% of revenues coming from overseas, whereas healthcare has less than 20% of their revenues coming from overseas. So that's been really helpful for small caps, for healthcare in general, but more
Sure.
small caps because of the deal making, the mergers and acquisitions, the better innovation, and they're more insulated from the policy for that industry.
Dan, how about you? I know you're positive overall, but are there areas, sectors, stocks that you think really are standouts?
Yeah, so for a while now, we've been overweight equities, overweight U.S., and overweight cyclicals. And right now, we're particularly overweight late cycle type of cyclicals that benefit from improving nominal growth. Because I think inflation,
what are we talking about?
Energy, materials, industrials, technology, all those sectors are really, not only are they cyclical, but they do well late in the cycle. And I think inflation is something that investors are just underpositioned for,
Right.
both in equities and from a fixed income perspective is probably the bigger risk there.